Welcome to what should have been the keynote panel of the weekend. You're in for a treat, ladies and gentlemen, and thank you for joining us here for the investing and trading panel this weekend. My name is Tracy and I will be your panel host. Let me introduce you to our guest, which I thought was 3 but is 4. Sitting next to me here we have Liam O'Doherty from Binance. We have Richard Morwood from VEMA Trading. We have a surprise guest. So you may have seen it would have been William Wright from Imperial Wealth. We have Mitch Nixon, who has stepped in. And we have the #1 man, Dave Haslop, down the end here. I didn't even know Dave was on this panel, but he is, and I'm excited because he always brings a wealth of knowledge. So welcome to our 4 panellists. And myself, my name's Tracy Plowman, and I'm from Bamboo, and I'm going to put these guys through their paces, and we're going to learn a lot in the 43 minutes we have left. So to start off, let's do a little bit of an introduction from you guys, and maybe a good question to start off with is a little bit about your background and what has you excited about trading at the moment in this market, and maybe a little bit about what we could hope to do, and what excites you about this market at the moment. And you're sitting next to me, so let's start with you.
Awesome. Thanks so much for coming, guys. My name's Liam. I'm from Binance Australia, and I'm helping Binance onboard the next billion users. We're looking for our next million in Australia, and I actually work across APAC as well. So my work touches 30, 40, 50 million users, which is pretty crazy. I'm really excited about crypto right now for a pretty specific 3 reasons. First of all, we are at the birth of a new asset class. 15 years ago or so, when Bitcoin first launched, we saw a new digital asset class born. And over the last 15 years, that asset class has now been legitimized, and it's been recognized by the largest players, banks, financial institutions in the world. And we're no longer just a hobby, a side show. We're now a legitimate asset class. And despite that, we're really the only in the first asset class in history which is democratized, decentralized, and that we can all access at the same time. And in fact, we got to front run these institutions, these nation states that now want to step in and take advantage of this ecosystem. So I think not only has it been an incredible journey so far, I think we're really only just getting started, and I think that's an incredibly exciting thing.
Absolutely. Absolutely. Richard?
Hi everyone, my name is Richard Maud. Thank you for inviting me onto the panel, guys. Really appreciate that. My name is Richard Maud. I'm the founder of VEMA Trader. We write day trading software that makes day trading as simple as possible to do. That will help take your trading to the next level and increase your profitability. What am I most excited about the markets for right now is the way prices are moving. As day traders, we make money off the volatility of prices, and whether that be up or down, but it's always more exciting when it's going up. So that is most definitely the thing that most excites me. I'm looking forward to crypto, Bitcoin specifically, getting above 100K, which will then, as Lee was talking about here, will absolutely legitimize the asset class and just bring in a whole bunch of retail traders who say, holy Julie, that's a big milestone. I need to get involved in this one, which will bring more people into the space.
Yeah, but I think you can, I'm just about to say that you can see the amount of retail that are here at the moment, yesterday and today. I think that's on the way.
Yeah, absolutely. Us particularly, we're seeing a lot more people who are saying, hey, I'm new to this, be gentle to me. What do I need to learn about? And so yeah, that's really exciting to see more people coming in.
Absolutely. Mitch?
So I'm Mitch. I'm Chief Research Officer just of that store behind you at my store, Imperial Wealth Crypto. So, thank you. So I run the educational and trading services over at Imperial Wealth Crypto. We focus around both investing, trading, research, and definitely education. So, a bit closer. There we go. Sorry. We focus on education, investing, and trading over there. In terms of what I'm excited about, without repeating too much, I think there's some excellent, industries coming through, and I'm super excited to see the technology that's coming up. We've got obviously artificial intelligence. Got people like Larry Fink saying they want to tokenize, everything on Ethereum. We've got layer 1s coming through, so super excited about where the industry's heading and the tech that's getting involved. So yeah.
Okay, so you've just mentioned layer ones. I think we've got layer twos, layer threes,
Yep.
possibly a layer 4. Where are we going to stop?
Layer zeros,
Yep.
don't forget those. Yeah.
There we go. We're going back and forward. And
Yeah.
AI you've touched on.
Yeah.
Okay, thanks for that. Dave, what are you excited about?
Number go up.
Number go up.
No, I'm more excited about. I mean, we've been watching the number for Bitcoin go up for years, right? So, I'm not saying that the hype dissipates, but you know, after a while, you kind of get used to knowing that at some point in the cycle, Bitcoin's value is constantly going to increase. So, what I'm personally excited about is seeing the actual ecosystem and the community grow. We're getting less and less people saying that Bitcoin's a scam. We're getting less people, or more people asking me, you know, what is it? How do I use it? Where do I buy it? The more that question increases, the more the industry grows, and then the more legitimate the entire asset class becomes. So I'm excited about the growth of the industry and the community more than I am the number itself.
I think some good answers there. We're all here and we're all excited about this industry and the price going up. But I think we're talking about trading and investing here. Can I get a show of hands? Who is new to this industry? Who has not bought crypto or has only just bought crypto?
Don't be shy.
Yep. 1, 2, 3. Okay. Who would class themselves as intermediate? Okay. Who's an OG? Who's a native? Okay, half you didn't put your hand up, so. All right, so in that case, so there are some noobs here, there are some people who are green. So in that case, maybe we'll go to the panel here and we'll start to talk about what kind of mindset or what kind of things should we be looking at for people just starting out in trading now or investing. Maybe we'll start again with you, Liam.
Yeah, sure. So you want to be trading with confidence and you want to understand what you're buying and why you're buying it. The best way to do that is to do your own research, and the best place to do that is Binance Academy and the Binance Australia YouTube channel. Binance Academy has been accessed by over 150,000 Australians just this year, and over 39 million users globally since its inception. It covers basically every topic in crypto, whatever you want to learn about. There's an article, a video, an explainer. Whatever you want to learn about, you can start at Binance Academy. We've also got amazing videos on our Binance Australia YouTube, going from Crypto 101, Crypto Tax 101, Bitcoin 101, all of the things that you want to learn about when you're first coming into the space. And from there, you can go down the rabbit hole, find the things that interest you, and go and try products, go and use protocols, go and understand what it actually is that a token represents, and follow your nose. You'll have a really fun journey. You'll learn how to use the tech, and along the way, you might form yourself an investment thesis.
What about you, Richard? Are you guys offering some kind of education?
So VEMA Trader doesn't offer the education specifically. We direct people to our education partners, be they MTC Education, MTM, Empire, Crypto Calls, a whole range of them. I love that our answers are going to be completely different here. You're saying go ahead and learn about the tokens. I'm saying, well, if you're going to get into day trading and you want to get into day trading, very important for both of our topics perspectives here. We'll be learning about how to do some technical analysis on the chart, understand what support and resistance is, understand market structure and trend lines. Because with those, you can then form your trade plan, which is your style for getting into the market and also how you're going to be getting out of the market. So never, ever get into a market, into a trade, without having rules for where you're going to get out of the market, whether it be a take profit or if it goes against you. Worst thing you can do is be holding an asset, watching it go down, thinking, yeah, but it's going to turn around, it's going to go back up. No, cut your loss, get out.
All right, Mitch.
Yes, I think it's important firstly to kind of differentiate between investing and trading, and I think you'd be surprised how many people have come to the booth and said they've got hundreds of thousands of dollars in the market, but unsure what to do, and they're not sure when to exit or what's going to happen next year, and they're really anxious. So it's super important to educate yourself. At Imperial Wealth, we've got a knowledge centre, all this free educational resources. We've got a free trading course. So over there, it's paramount to us that before they get heavily involved in the market, they're educated first and foremost. With trading, unfortunately in this market, pretty much 99% of leverage traders lose. Like the analogy I like to use for someone starting out in leverage trading is it's like any other hobby. People think you can just come to trading. They probably see these flashy P&L cards of people and think that you can just make it pretty easily. They size up their leverage, whatever it is. But really it's the same as kicking a footy or being an artist or anything. It requires time, practice, time in the market, experience, educating yourself, technical analysis. And the thing that we push at Imperial Wealth, particularly with day trading, is risk management and psychology. I find they're the two most important things.
Okay, so there's a lot of information there. So we're talking about two things. You've got fundamentals and you've got technical analysis. So there's fundamentals here, you know, technical analysis here. And it's funny because I'm in some trading groups and have been for very many years. And, you know, sometimes I'll pop something in there about fundamentals and they'll blasphemy, you know, because they're all about technical analysis as well. So I think you need to understand what kind of trader you are, whether you're a swing trader or whether you're a trader at all, or whether you're going to...
Yeah, we'll just touch on that. It's literally something we've been pushing really importantly when people on board with us. It's finding out what type of investor you are, how risk averse you are, the type of risk you want to take on. We really push dollar cost averaging strategies both in and out of the market. Unfortunately, most traders fall for the trap of thinking they can time the market when really no one can time this market. No one picks the top, no one picks the bottom. So we really try to simplify it down, educate them on type of strategies like that. And
because we're talking about investing or trading. So if you're trading, you're constantly watching the market, whether you're going in and out. If you're investing, you can say, I believe in Bitcoin. I'm Michael Saylor, buy, but you're going to stick for the long term. So we think Bitcoin is, you know, going to $1 million. So you can buy today, safe in the knowledge that you have conviction in this coin. It might not be Bitcoin, it might be Doge, it might be another coin, but you buy it, you put it in your wallet, you don't look again because you've got the conviction. You've invested in that, you leave it, and you go off and you live your life, okay? Because you think it's going up. Trading is you're constantly looking, you're day trading, you're on the 1 minute candle, you're on the 5 minute candle, you know, that's trading. So investing and trading are very different. So you need to think, okay, I'm looking at this crypto thing, I want to buy Bitcoin, but if you're investing, you're buying it, you're sitting in your Binance wallet, you're not looking at it again, or you're trading. So you need to understand which one you're doing. Sorry, Dave, I've completely cut you off at the end there.
I'm not even here, Tracy. Just keep talking. It's all right.
Okay, any more thoughts on that train there? Go then.
Yeah, I guess, you know, my point was on fundamentals is one way to look at it, or a long-term thesis. And yeah, like I'd double down on try the products, try the protocols that you're interested in. And yeah, see if it solves a problem for you. If it solves a problem for you, it might solve a problem for some other people. And that's the start of product market fit.
I might hammer home a little bit the fact that you talked about do your own research, and maybe that's not as important with the trading side of things, but it very much is with the investing side of things. And I think that's where education does come into it. You talked about, you know, you've got your education centre, Binance has it. I think a lot of the other exchanges have their own research centres too, and then there's podcasts that you can listen to. So that is doing your own research, which comes along with the fundamentals, but also with your technical analysis. There's a lot of really great podcasts that you can listen to that follow that thesis.
Yeah, I just want to add to that one. It's not TA or FA. It's not I am a technical analysis trader or I'm a fundamental analysis trader. To be a day trader, you need to be doing both of them. There are most definitely fundamental things that go, hey, there is a bunch of activity happening on the Solana network, which makes it something that I want to look at from a technical perspective. So a lot of people go, I'm pure TA. Well, you want to be doing both there, most definitely.
Would you say there's any TA in long-term investment?
Looking from my perspective, when you're trying to find the entry point to get into a trade, absolutely. I'd say, hey, I'm looking for a long-term investment to get into something like Ripple, but it's currently been stuck at resistance for a while, So from a technical perspective, when I see that it has broken through resistance and it's had the candle close, great. I'm going to I can put my stop loss a lot closer, get a much better risk reward, and ride the price up. So they do go hand in hand, absolutely.
This might come into a question I've got here, which is the importance of metrics and tools. And I've written here, when analysing trades, what are the most important metrics and indicators traders should focus on and why? Obviously, risk management, you've talked about. You want to take this one, Rich?
Do you want to go first? Because we're having to go this way, no? So as a trader, whether you're doing technical analysis or fundamental analysis, the number one metric that you can be looking at per trade is what is your risk to reward. So, hey, how much am I willing to lose on this trade versus how much am I potentially going to gain on this trade? That is the number one metric that you should be paying attention to on every single trade. And just straight up shameless plug, VEMA Trader is all focused on the risk reward. So position sizing and thing comes into play there, but it's all about the risk reward for every single trade that we want to look into.
Mitch?
There's really nothing to add on to what Richard said. The most important thing absolutely is risk to reward, and it's actually calculating that before every trade, understanding the exact risk you've got to your stop loss if we're talking about trading. And really, it all comes down to psychology at the end of the day. You can always have a plan, you can always have the risk to reward in place, but it's about taking the trade as well. So not only is risk management pretty much the most important thing when it comes to trading, but also trader psychology. So in the course that we have at Imperial Wealth, it's pretty much the first module because, I find trader psychology is one of the most important things you pretty much have to learn to be able to trade. So, yeah.
Dave, I know you've had some success trading in the past. You've obviously got something to add with your risk management tools. You can give any tips?
I think one of the most important metrics to look at will be the liquidity and the volume of the coin that you're wanting to purchase or trade. So I've seen it over the years where so many people will find a new coin on social media, be it Twitter or Facebook or whatever, and someone that's got maybe a large following might have some money in this coin, and they say, everyone go buy this coin, and it's a classic pump and dump thing. So people FOMO into these coins. The price goes up because there's no liquidity in the market. It only takes a small amount of capital to actually grow the price of these coins. And then the people that owned it, at the start, they sell it because the people that are FOMOing in it, they become the buyers that they're selling to. So making sure that there's enough liquidity in the actual market that you're buying into is really important, because if you do buy and then you do want to sell, you need to make sure that there's other buyers that want to buy from you, because it's a zero-sum game. And if there's no one there to buy it, you're stuck with a bag of coins that you can't sell and you've lost your money. So always look for the amount of money that's in the market before you purchase, as just one touch point of the research you should be doing.
Okay. All right, some good points. Anyone else want to add anything to that one before we go on? Okay, we're going to move on to what was a touchy subject when we spoke about it in our Telegram chat, but I think we've all passed it now. But we do need to talk about leverage. We do need to talk about leverage. No side chat, boys. It is very interesting, so maybe we have the chat. So leverage is obviously something that as new traders you don't want to touch, and as old traders you don't want to touch. But leverage, and you touched on it, I think you said 99% of leverage traders lose money. I thought it was 97%, and I'm in that 97%.
I reckon it's higher than 99.
Leverage is tricky, and but you can play with leverage and you can make a lot of money, but you need to have your risk profile managed very tightly. You need to really know what you're doing. And I wholeheartedly disagree with platforms that offer 200% plus leverages, which is just ridiculous. But I'll leave it to the experts to talk to you a little bit more about leverage, what it means, and how to dabble in it the correct way.
Sure, I'll go first. So people who go ahead and use leverage and get wrecked and they blow their accounts is because they don't understand what leverage is and they don't understand how to use it. When used correctly, leverage is a very powerful tool that is absolutely perfectly safe to use. It's the people that then go ahead and go, I'm going to go 100% of my account on Bitcoin, I'm going to 200x leverage because I'm going to make so much money, and they're the people that get like 0.5% move against them and they've just lost their entire account. People who don't understand what leverage is and how to use it, they're the ones who are not trading, not even investing, they're straight up gambling. And that's what a big thing that people get wrong with leverage is. So again, this is one of the problems we solve with VEMA Trader, is how to use leverage correctly with the position size calculator. If you know what your entry price is and you know where your stop loss is because you have a trade plan and you're focusing on your risk to reward per trade, then you can figure out what your position size and leverage needs to be in a way that you will not be getting liquidated, you are not risking more of your account, and leverage enables you to be in more positions at once than you could do if you were spot trading. And that's the correct way to use leverage. And I'll probably stop there because I can go on a long time.
I know you could, yep. Mitch, what about you?
I completely agree. I'm fine with exchanges having maximum amount of leverage, and it also comes down to custody risk as well, which I go through with my clients a lot. If used correctly, leverage is a very handy risk management tool when it comes to custody. And I'm not going to say that exchanges are dangerous and whatnot, but we've seen multiple go down where people feel the need to have hundreds of thousands of dollars on these exchanges to trade. You can utilize leverage to size up your positions perfectly within 1 to 2% risk without having a ton of margin on these exchanges and being exposed to custody risk. So I find it a hugely important risk management tool as well. So I completely agree with what Richard said.
Can I add one thing onto that one? Okay.
Sure,
There's all these things that people are going around with leverage when they say leverage is going to be bad and it's going to give me more profit and things. When used correctly, leverage does not affect your fees. It does not affect your P&L in any way, shape or form. So when used correctly and safely, it's wonderful and amazing.
Yeah, so just to add on to that, people don't understand, like 100 grand at 1x leverage is the same as 10 grand at 10x leverage. You've got the same position size, the same risk to your stop loss. So people think that traders that are using 100x leverage are more risky than people using 5x. It's not the truth. It makes no logical sense whatsoever. And it comes back to the misunderstanding of leverage, and 99% of people don't understand it. So
we haven't met before, and I'm just getting mad respect for this guy.
Before we do roll on to your thoughts there, I think having witnessed a lot of people using leverage the wrong way in trading groups, I personally feel that people should be able to use leverage if it's their own personal accounts. They should be able to use it. But what I feel, having wrecked myself a couple of times, not majorly but smallly, and I won't touch leverage again, but it's because I at the time didn't trust myself to use my own risk strategy because I hadn't been trading for long enough. Now I would. But I think there needs to be trainer wheels in place that you do your trading course, you learn to trade, you do at least a year, and then you can use leverage. But and that's my own fault because I'm going, okay, this is how I'm going to do it. But you slip up. I know what you're saying. It's leverage is bad. Leverage is bad. You got to do it the right way. You got to do it the right way. But you don't.
No.
You get caught up in it, and you see things, and you go, I'll just do this, I'll just do that, and you don't follow your own rules that you set. And it doesn't work out. Yeah,
so, and I was speaking to Richard just before, very, very briefly, and one thing at Imperial Wealth, and I'm sure that Richard proposes to people starting out in leverage trading and practicing risk management, even practicing psychology and time in the market, is paper trading is literally one of the best things you can possibly do when starting to learn to trade, because the psychology involved in losing real money, which you will in the first 6 to 12 months of trading.
Do you want to explain maybe what paper trading is?
So paper trading is essentially the exact same as normal trading. You're just using paper money. So on any exchange, I'm unsure about Binance if they've got it. You do, I know Bybit do, BitGet. You can actually go on there and load your account with, say, $100,000 in USDT that's just paper money. So it's not real money. And you can effectively trade the market every single day and practice with that amount of money, practice risk management, practice using leverage, 1 to 2% of risk to your stop loss, etc.
Perfect.
So highly recommend doing that if you're starting out.
100%. All right, love to get your thoughts now, Liam.
Cool. So if you do decide that you'd like to try out a leverage product, our CMO Rachel Conlon yesterday in the keynote theatre had a presentation where she announced that we're going to be launching margin on Binance in Australia.
How did I miss that?
Yeah.
Seriously, how did I miss that?
That is massive. That is a really big announcement, folks.
It is. It's really, really exciting. There's going to be some
Retail.
There's going to be some controls around the product. We'll have more details on that in the next week or two. There's going to be details coming out about what the product involves, exactly what kinds of margin trading are available and what kind of leverage is available. But that was announced yesterday by Rachel, so keep an eye out for that on our socials. That'll be coming pretty soon.
That's actually...
Can I just put in a couple points?
With some
No,
controls.
not retail.
With some controls. That's massive. That's actually...
Is this
Really
thing on?
exciting,
Is
man.
my
That's
microphone
really cool.
on over here? Or
Huh?
It's on?
You're on. Dave, do you want to give some follow-up?
I do, yeah. So
Yes, of course.
to your point before where you said that you weren't trading long enough before you really started leverage trading, you lost money. People need to understand that it's a bit of a step process. Like, you can't just come into the market and go, I'm going to leverage trade and I'm going to make heaps of money. You have to be realistic about it. Start by paper trading, just like the guys said. Start by spot trading. Learn what it's like to buy and sell. Learn what it's like to lose money, because I guarantee you, every single person that comes into the space will lose money, whether it's $10, $100, or $1,000. You have to have that expectation, because when you lose a little bit, and if you're doing the right risk management, just like the guys said, it will only be a little bit. That's when you learn the best. So consider the old saying of 10,000 hours makes me an expert in something. Do 10,000 hours before you expect to actually make any money. That's my advice on that.
Yeah, sorry, can I just add? It's that exact point what I said about, being a hobby. It's the same as any other hobby. Like if you're trying to become a good tennis player, you're going to practice 5 times a week. You're not going to be able to be Roger Federer straight away. So it's the exact same thing with trading, believe it or not. If you practice every day, you practice technical analysis, you practice psychology, the emotional feeling of price dumping to support, having to enter a long with sizable risk. It's the same as any other hobby, really. And you're not going to be good at it in the first 6 to 12 months, and it's going to take some time.
So the stats that people say about most traders lose money is, yes, it's correct, but the way there was a study done on this on the Forex market to say they do get in and they do get profitable. Most people do get profitable, but where they go wrong is they don't claim the profit. They get greedy. They didn't have a trade plan, and so price goes against them, and they go, I'll just move my stop loss further down. And because they're in a leveraged position, I've made the dumb mistake before. That's one of the things that VEMA Trader specifically solves. We say, hey, if that was your exit, you're sticking to your trade plan. We're not letting you go around and stuff that one up. And one thing on that, most people do lose money, yes, but the stats on VEMA Trader are really interesting here. 60% of our customers are profitable. And the other ones that we can see when they start off paper trading, absolutely start off paper trading, they will have their losses for a while, but when they realize they've got a trade journal built into VEMA Trader and they actually spend the time to analyze their data, they can see what's working, what's not, and then that's how I can go ahead and become a profitable trader. So having a trade plan is the absolute key to everything there, and sticking to it.
Yeah.
Full disclosure, I'm a VEMA Trader user. So everything Richard is saying, I absolutely echo. It is a really good product and a really good strategy. Like having that exit strategy is extremely important.
You've got to have a plan.
You have to have a plan. Yeah.
A lot of people talk about dollar cost averaging into the market. Then you've got to dollar cost average out. So you've got to have a plan. Yeah. And I think me now, 2 kind of cycles in, this being a third, I have a plan finally. But you touched on it there. There's nothing wrong with maybe no one went broke taking profits. You've got to take profits. Yep. It's even good now. If there's people here who have dollar cost averaged through this bear market, and you're sitting on, some generational wealth right now. We know Bitcoin's going to keep going, but there's nothing wrong with clipping some profits now. So not financial advice, obviously. But let's maybe talk sell signals. Let's talk now about some trading practices, which we've kind of touched on anyway. But what are some of the common misconceptions or mistakes that you see new traders make? Again, we've been talking about these, and how can they avoid them? So maybe some recommendations for traders and investors to maybe adapt their strategies in a volatile crypto market. So maybe what can they do for those?
All right. Sorry, just saying, who's going to take this question first here? So now I've lost my train of thought. Can you ask the question just one more time, please?
I'm saying common misconceptions or mistakes that we see traders make and how to avoid them. Obviously, we're going to see some volatile markets. I mean, it's all up now, but we see some volatility. So what kind of things to avoid?
Yeah, cool. Okay. So I'm hammering on about this, having a trade plan. If you're getting into a trade, always know when you're going to get out, whether it be where you're taking profits to get out, are you moving your stop loss up into a profitable position, or when market goes against you, do you know where you're going to get out? Always only ever get into a trade if you have a plan on how you're going to get out of the trade. With part of the trade journal that you should be doing, most people don't journal, which sucks, but as this lovely gentleman here was saying, you need to be able to get that feedback to tell you what was I doing wrong. And so with a trade journal, which VEMA Trader automates for you, shameless plug, you can identify what those mistakes are, and then you can update your trade plan, be that in VEMA or something else, put those trade plan rules in there to say, what mistakes am I making? As an example, I've got 5 main mistakes that I make. The biggest one is I put my stop loss too tight because I'm chasing a high risk reward. I get stopped out too much. Bugger, I lost the money. With a trade journal, I can see exactly that I have lost 15% of my account because I put my stop loss too tight. That's the power of a trade journal, which you can then say, there's my silly mistake. So there's plenty of mistakes that people make. One of mine is stop loss too tight. Another one is letting people move their stop loss away from their entry. But I will pass it over at this point.
Mitch?
Yeah, I'll just briefly touch on investing instead of trading, but really we've kind of said it already. If you don't have a plan to exit the market, unfortunately, like 99% of traders lose, I reckon probably 90+% of people so far in crypto have round-tripped their gains cycle to cycle. So I really preach dollar cost averaging both in and out of the market. No one can time the tops, no one can time the bottoms. So if you have a dollar cost average strategy out of the market in place, you stick to it, you're going to beat 90% of people in this market. Like you said before, like if you've made life-changing money, change your life. A lot of people make life-changing money in this market and don't change their lives because they refuse to take profit. The feeling of euphoria is so much in this market, even right now, that most people will round trip their gains because they'll never sell. So at Imperial Wealth, we produce a number of research reports on how you can do this, whether it's periodic timing, week to week, or using technical analysis like Fibonacci extensions or something like that. Just having a plan in place to get out of the market is perfect. So.
All right, let's change tact a little bit, and I'll go with Dave, and then I'll come to Liam. Let's talk a little bit about investing portfolio structure. So if you were to give advice now on a portfolio structure to someone who is putting in, $10,000 or $100,000 or $1,000, how would you structure your portfolio? Not financial advice. Obviously, Dave, you would be 90% meme coins.
Definitely not financial advice. So let's make that very clear. Just diversification as well. But it's really important that when you're stepping into this world, you need to decide if you're a trader or an investor, first and foremost, because your capital allocation will be heavily impacted by whether you're one or the other. So if you're a trader, we generally tell people, in a single trade, don't risk more than sort of 3 to 5% of your total account. So if you're playing with, $100,000, that would then mean that per trade, you're only going to put between 3 to 5,000 in, so that even if you get a 3% stop loss, you're only going to lose a small amount of your actual capital. And as long as your win rate is higher than your loss rate, then that's a safe play. If you're an investor, then you need to start looking at more things like, well, what's the tokenomics of a project? Assuming you're investing in altcoins and not just Bitcoin, because Bitcoin's a pretty safe bet, I think we can all say. But learning more about the fundamentals of a project is going to be important for investing long term, because you need to make sure that the project's going to be there in 5 years. And this is crypto, so most projects don't last 12 months, let alone 5 to 10 years. You've really got to make sure you do your research before you allocate that capital and then diversify it. So for me personally, the strategy is Bitcoin, 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 but that doesn't mean I don't like to play in altcoins as well. I love investing in Solana and Ethereum. So it's just finding the coins that have the right fundamentals, the right volumes and liquidities, like I mentioned before.
Dave, are you looking at any industries in specifically at all, or not? You're not looking at like AI, gaming? I'm trying to get some alpha here, mate. You're giving us.
I love gaming. I think gaming is going to be a huge, huge boom over the next 10 years for crypto and Web3. So if there's a gaming coin that's got some really good fundamentals and a big team behind it, I'm definitely keen to look into it.
Okay.
But I don't really go too far into the altcoins for myself.
That's blood out of a stone, folks. All right. Anything from you, Liam?
Not financial advice, Tracy.
I got a question for you, Richard. Does buying the top forever count as an exit plan?
Does what, sorry?
Buying the top forever count.
I can show you my current Ripple trade that I've got open. It's up 130% account growth. And all I'm doing to manage it is continually move the take profit higher, stop loss higher, take profit higher, stop loss higher. Keep on riding it as long as you can.
For anybody who hasn't heard, that's Michael Saylor's Bitcoin strategy, buying the top forever.
It's working so far.
And it is working for him. For me, I think if you're just getting started, you're brand new to this ecosystem, you can look at the more, I guess, like ways of portfolio structure and things like that. But the not advice that I like to give is to, as you're starting out and as you're doing research, putting a little bit of skin in the game is a great way to make sure that you kind of incentivize your investment. I was speaking with a lovely young lady at the booth before who's just starting her crypto journey. and we were talking about how that would potentially help her really invest time and energy into learning more about the ecosystem and the tech, because once she has a little bit of money on the line, then she's going to pay a lot more attention to that. And the good news is a lot of these tokens that are available on Binance or that you might be considering have some kind of utility. Ethereum, as a great example, is a gas token, or Ether is the gas token for the Ethereum blockchain. So to use the Ethereum blockchain, you have to buy a little bit of Ether. You can't use Ethereum without a gas token. Same for BNB, same for Solana, and so on and so forth down the list. So a little bit of skin in the game to start off with. If you're looking at new projects, you want to try things out, can be a really great place to start.
All right, that's a good one. Look, I think 2 minutes each to finish off. Maybe a parting thought for anyone, if you're getting into the game, what are your final thoughts for investors or traders, if you could leave them with one thought? Dave?
I just want to quickly expand on something Liam just said then about having that little bit of skin in the game. We spoke before about paper trading and how it's a very safe way to start learning trading and learning investing. The only real risk with paper trading is that sometimes you can convince yourself you're a genius. So you can do really, really well at paper trading and you think, I got this, I'm quitting my job, I'm going to be a day trader, I'm going to be a billionaire tomorrow. And okay, cool. But then you put a little bit of money in, your psychology changes 100%. It's no longer the same. I've got money in it. I'm scared of losing it, whether it's a small amount or a large amount. So just remember, if you're paper trading to practice, that's good. That's a good first step. But when you start putting money in the market, just start small, learn to lose it a little bit, and learn how your psychology will change before putting in any more.
I like it. Okay, 2 minutes, parting thought.
I think on the investing side of things, if you're kind of on the fence now or you're new to the game, we have a lot of clients that have obviously signed up in the last month or so, given the euphoria of the market. And a lot of their questions are, things have already gone up a bit too much. Just get your entry, because this market gives you that many pullbacks. It's funny at the moment, Bitcoin is $100,000. Majority of alts are the same price as when Bitcoin was $60,000. Most people don't understand that, and we're yet to really see the fruits of this market. So if you're on the fence, I think get an entry, educate yourself. At Imperial Wealth, we have a knowledge center, free trading courses, all the resources you can do to begin to learn how to get into the market. And then from there, really just dollar cost averaging, as I said. And I guess on the trading side of things, without repeating myself, educate yourself, get into paper trading, understand risk management, trader psychology, and go from there.
Thanks, Mitch. That was awesome. Rich?
So if we're talking brand new beginners, first thing I always recommend people to do, I'm not saying just because you're on the stage, I direct people to Bamboo. It's where I've sent several people, including my own mother, who called me the other day to say, I've made some money, I'm going to get some Christmas presents, how do I get the money out? So that was exciting.
My mum uses Bamboo too.
Yeah, it's really, really simple and great.
See? Bamboo's for the mums.
Yeah. So if someone's new to the game, put some skin in the game, get a way to really simply get some every once in a while, and honestly, Bamboo's the easiest one I've found for that one. And then after that, hey, cool, you can see, that it actually works. It does actually change the amount of money that I have. It's going up or down. And then the next thing to do is, rightio, now I want to learn more. From a trading perspective, get educated. Find an education group like Mastering the Markets and learn some simple technical analysis. From there, you can decide where to go, because the technical analysis will apply to both fundamental analysis and over on the day trading side as well. And finally, would be to come and visit my booth over at VEMA Trader, and let me show you how easy trading can actually be.
I've got a closing thought for you guys on volatility, particularly if you're just starting out. Crypto has a reputation for being extremely volatile, as does Bitcoin, and the further down the list of tokens by market cap you go, often the more volatile they get. When you're starting out, it can be really difficult to think about that volatility in a rational way, and it can be really nerve-wracking, really scary to see the US dollar number in your account or Aussie dollar in your account start to go down. It's really important to understand that volatility is not a good or a bad thing. It's just a nature of this industry. And volatility can be, in fact, a very good thing for your portfolio, for your investment, for your savings, because upside volatility is exactly what we're looking for. And the reason why this asset class is so exciting and interesting and attracts so many people is because it is volatile to the downside, but it is also volatile to the upside. If you think about Bitcoin's last 15 years, it has been incredibly volatile to the upside. If you think about Australian property when priced in Bitcoin, because we all love talking about property in this country, it's actually very volatile to the downside. We're down about 99%. So don't be spooked by volatility early in your journey. Understand that it's a part of this game and that it's volatility to the downside and to the upside, and by managing your emotions, managing your risk, using effective portfolio strategies, you can help that volatility work for you, not against you.
There you go, folks. We've got 4 really strong, intelligent crypto minds here giving you some alpha and information. I think the key giveaway here is education. Okay, you've got to upskill, you've got to understand, you've got to have a lot of knowledge before making any decisions. And you need to understand whether you're an investor or whether you're a trader. And with both of those comes the same amount of knowledge. You really need to upskill, so you really need to get out there and you really need to understand. Ask questions. You know, these guys want to give you a lot of information. Anyone in crypto, it's like FitStop. You know, everyone that's in FitStop tells you they're in FitStop. Anyone in crypto will tell you all about crypto. So there's so many great platforms, there's so many great podcasts, YouTube channels that'll tell you all about what you should be doing. So upskill, you know, ask questions. We're just about out of time now, but any parting thoughts that you guys want to give to our audience today?
Something you said just before, managing your emotions. People get very, very emotional when it comes to their money. So it's almost impossible to do at the start, and it takes years to learn, but you need to remove the emotion from the investment as well. Just follow facts, follow fundamentals, follow technicals, but just try to remove the emotion from the investment as much as possible.
Good advice. These guys will be at their stand, so if you want to accost them, please go over and I'm sure they'll have a chat with you. But thanks for coming along, everybody.
Thanks so much, everyone.
Thanks very much for having us.
Cheers.